Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Velasquez. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to Pique Your Interest. I'm your host, Tim, and today I have a very special guest. I have my friend Zo here, and he is going to tell you all about what it is that he does. Go ahead, Zo.
Hello, everybody. Thanks for the invitation, Tim. Again, my name is Zo. I'm the CEO of Zokpia Accounting and Consulting. What we do is we're a business financial service firm that really helps business owners become confident CEOs. So by license, I'm a certified public accountant, but that's what I do during the day. By nighttime, I am a secret agent.
How did you get started in this?
Honestly, I've been doing this for a little over a decade now.
Okay.
My face looks young, but my wisdom is very ripe. I started long ago as an entrepreneur, in high school selling candy to friends and students.
Awesome.
And so that kind of nature in me developed as I went to school to study accounting. I realized I was on the right path, but accounting specifically, like working for a firm, wasn't the end all be all for me. So after I started my career with Deloitte, I had an opportunity to start my own firm, which I did at a young age. And then here we are, seven and a half years later.
Awesome, man. Awesome. All right. Well, I've had the privilege to get to know Zo just a little bit over the last couple of months. I think he's got a real passion for what it is that he does.
Yeah.
I think that there's definitely, you can tell that you like what you do.
Oh, yeah.
You're
Not
always smiling too, man.
Yeah, not a lot of people like accounting.
No.
I see frowns next to accounting, but I like to smile because it can be very powerful. For every type of business.
Yeah. So let's get into specific businesses. So obviously I'm in the real estate business, and so the bulk of the referrals that I get come from real estate agents. Mm-hmm. Let's talk a little bit about real estate agents and accounting and finances. Sure. And it's a hard business to be in because you don't know where your next paycheck is coming from. Yeah. Right. So let's say you're a real estate agent and you just got a nice big payday. What do you do with that money? Because you're 1099. You're not paying taxes on it when it comes in.
Sure.
How do you know what to set aside for taxes? How do you know what you can spend?
Yeah.
And then let's get into the reinvesting piece, because you need to reinvest in your business, right?
Sure,
like you
absolutely.
just can't
Absolutely.
Yeah.
So understanding what to put aside when you land that big check. The first thing you do is don't do anything. Like the worst mistakes are made when you're emotional, when you're excited, when a big lump sum of money come in. You have to slow down, maybe go get a coffee break just to say, okay, I got it, and then start making your decisions. Because you got to think about a few things. Yeah. You got to think about the future, you got to think about taxes, and you got to think about your current needs currently.
Okay.
Right. So now we're compartmentalizing those things and then setting aside our cash or that new commission check strategically. Let's say for taxes, you got to consider what I would recommend is looking at your previous tax return, looking at your filing status, and maybe your effective tax rate. That kind of tells you overall what you can expect from a tax perspective. Yeah. But you also have to be very aware, because you got 1099 income. There are 3 types of income taxes that are going to be on your returns that you have to think about. Federal income tax. On average, you're going to be looking at 24% tax bracket. You have your self-employment tax, that's Medicare and Social Security. That's an automatic 15.3%. And then you have your state tax, which many people don't realize Maryland has a state and local tax attached to that. So if you start adding up the percentages, you're like, wait, 24 plus 15 plus 8, that's like 40% of my money. Conservatively, I would say, okay, 40%. But I would honestly, whenever someone comes to me and they don't have so much background in how the whole tax system works, I say put aside 40% just to protect yourself from your own ignorance, right? Yeah. Because it's not just paying it ahead. You could do that, right? Or you can put it into a high yield savings account just to protect yourself, right? Until you figure out what that bright line is of like, okay, maybe I don't need to put away 40% because I know that 20 is going to handle most of the things, because everybody has a unique situation. Right. So that's the tax side of it. But other than that, you got to make sure you have that emergency fund for the business. For every season that's a high season, there is going to be a low season.
Correct. It's cyclical, very cyclical.
Very cyclical. Yeah. So you have to be wise as a serpent when the seasons are high. So you're planning for the downturns.
Okay. Now, how you mentioned an emergency fund.
Yeah.
What is a realistic but also like very solid emergency fund you should have set aside?
Well, honestly, it's going to be depend on your business.
Okay.
And I would say between 3 and 6 months. I'm more conservative to say that the more you have set aside from cash, the more peaceful your sleep is at night. You get what I'm saying?
Yes. Take care of yourself first.
Yes. And so, we've learned a few years ago during the pandemic, even some of our most notable companies couldn't survive for after like 6 months or so.
Correct.
Right. And who knows if that comes back again, but you want to be able to plan for the unexpected, if you will. So I'd say 3 to 6 months to start. And then as you grow, you want to get into a habit of growing that nest egg and identify, okay, this is my emergency fund. And then once it's pretty healthy, you obviously can reallocate some of those and say, okay, now I'm going to use some of that to maybe grow the business or reinvest somewhere else.
Yeah. No, that makes a lot of sense. So, okay, so we've got taxes set aside. We're building a nest egg, an emergency fund. There's still money left over. You obviously have to live off of that money, right? So you don't want to spend too frivolously.
Yeah.
But you also want to reinvest in your business. How do you make decisions? And I know this is probably a very personalized plan that you can create, but could you paint like a broad picture of, this is what you should be living on, and then this is what you should be reinvesting back into your business?
Now, that is a great question, especially if you are a self-employed. It is just you, it's in your business. Yes. You got to think first, you got to understand that how you pay yourself is important. Well, at least if you're a Schedule C, right? If you're a Schedule C, realtor, your Schedule C business, you're going to be paying you can't really pay yourself a salary. It's not going to impact you from a tax perspective, right? So, but you do need to know that your taxes are based off your net income, right? Yeah. So it's after all of your business expenses, that's where the taxes are based off. So when we say whatever gross is your commissions, right? That's just the starting point. Take out all your expenses and then use that to determine your taxes, the net income. How to pay yourself is it's personal. It's very personal, right? I'm of the mind that the more you separate your personal living activities from the ebbs and flows of the business, the more healthy your business is able to function without your need for the cash.
Right.
So if the business's cash is so tied to you personally too much, your life will be as fluctuating as the business goes.
Makes sense.
And so as an entrepreneur, I believe your primary responsibility is to establish consistency and stability. Like if I go home every night to my wife and say, oh, we didn't make money this month. Oh, we made this money this month. We handle stress a little bit differently. So she might be like,
yeah. She'll ride the roller coaster with you.
Yes.
Yeah.
But the way that I like to say is you're trying to build stability, right? So if I can stick to a fixed amount that I live off of, and while the business still grows, I create stability. And then I slow down how much I increase my life livings that the business goes, and I only grow as a certain percentage. Right. So let's say like 30% I take to live on my own. The business has to sustain that. But if it grows 30%, I don't need to raise my pay 30%.
That makes sense.
Yeah.
Okay, so I'll tell you one of the biggest banes of my existence in dealing with real estate agents, and specifically real estate agents that want to invest in real estate. They want to buy a house, whether it's their primary residence or they want to invest. It's dealing with all of those write-offs. It is, because, and I get it, right? Like you don't want to pay taxes on everything that you bring in. So and there are legitimate business expenses that you have. Yeah. But I'll tell you, man, there are so many things that people write off that comes back to bite them later. Yes. How can they prevent that from happening?
Honestly, the way that you prevent it is you see the future. You kind of think about what's going to happen in the future, and understanding what's going to impact how your taxes impact everything else you might want to do. Like we can talk about if you wanted to invest in more properties and you're dealing with traditional lending through mortgages. Like You have to be able to put yourself on paper where they're confident in your ability to earn income. And a lot of times the lenders, you can speak much more to this than I can, are using your tax returns as like a primary income verification.
Yeah.
Right? And so if your tax returns are saying that you had a loss every single year, they can only trust that you are a losing business,
right,
or a losing client per se, or you won't be able to pay their mortgage. So you really got to think about, okay, do my tax returns show a profit? And a lot of people don't want to show a profit, but think of it this way, that the taxes you pay are an investment into your next investment.
Right.
You could think about it as just, this is a paper investment,
right,
so that I can secure greater financing for my next investment.
Right.
If you think about it that way, maybe you're a little bit okay with, maybe I don't have to find every way to write off a 2-week vacation that's going to cost, X number of dollars.
Yeah.
Because you're thinking about, okay, this is a kind of way to reinvest into the future.
Yeah, correct. And there are, just for educational purposes, there are mortgage types out there now that are specifically designed for self-employed folks. That don't necessarily go off of tax returns.
New to me, listen to him.
No, I've addressed it in another podcast episode. But it's really kind of a unique thing where you look at either the income that property will generate, or bank statement loans. You look at the income that's coming in, not necessarily what those expenses are that are going out, and you help qualify that way. So the writing off isn't always the end of the world, but it is. It is. If you're a real estate agent, you're self-employed, you're writing off a bunch of expenses.
Yeah.
You're eliminating our ability to use traditional financing with, using tax returns.
Yeah.
And so if that's the case, there are alternatives. They're, obviously a little pricier because they're the alternative, they're not the way. But it's certainly possible.
Interesting. So using the actual economics of the property to be the financing. Okay, that's great.
Yeah. I'll turn you on to that episode. It's really cool. It's a pretty cool product.
Thank you. Yeah, I want to hear that.
Yeah, for sure. All right, and then let's talk about scaling. Let's say you're a real estate agent.
Yeah.
You've been a real estate agent for a handful of years. You feel like you're really busy all the time, and maybe you're leaving something on the table. Like if you work just a little bit harder, or you had one more person helping you.
Yeah.
You might be able to get to that next level. How do you know when to make that step? How do you know when it's not just me in this business now, I need to bring somebody else into it to help me get there?
That's good, because when I was thinking about this question, there's 3 things that come to mind. Your goals, your capacity, and your ability. You actually answered the first one in determining why are you actually hiring that person.
Yeah.
Is it to free you up to earn more revenue or go out and do more business, or is it to free you up so that you can earn more, less stress?
Yeah.
Or less stress. Both are legitimate goals. None is wrong, but you have to know why you're actually hiring the person.
Yeah.
Right. Then so that you know what to do next after you've hired them.
Right. Makes sense.
Then the next step is knowing your capacity. Are you actually at the point where you can't be in 2 places at one time, where your multitasking ability is stretched thin, you are at your limit of delivery or client delivery?
Yeah.
That's an important assessment, because you don't want to hire too early when you have still room to give, right? At least you're going to be less efficient on that hire. The third thing is the ability, and that's where you're going to start talking about, do we have the profits to sustain this decision, right? Are we profitable already? What is our cash position currently? And then also, what is our cash flow runway after this person gets hired?
Yeah.
I like to think of profits as a indicator on the quality of your decisions in the past. We call it a lagging figure because oftentimes your profits don't show up until the deal is done. The expenses have already spent.
Right.
So you may not see what the profitability is until a little bit later, right? And that tells you the results of your previous decisions. But the cash position tells you what you can do today.
Yeah.
Because in our world, cash is king. Cash is king. I don't care what anybody tells you out there that you need to just be spending, investing all your cash. You should have $0 balance. No. Cash is king, because cash will tell you what you can do today.
Right.
And then once you start looking a little bit ahead and you can see, all right, each month is a net cash positive, net cash negative. Now you can start forecasting your cash, right? And that tells you, if I bring on this person, can our cash flow keep them going for the next 6 months, next 7 months? And that's how you want to make that decision.
That makes sense. No, that makes all the sense in the world. I think that's one of the biggest struggles that real estate agents have is, when do I grow? When can I take that next step?
Yeah.
And how do I know that that's the right thing to do? So I like that that's kind of a three-pronged answer because it's not just now is the right time. It's stepping back and making all of the answering all those questions first. Yeah,
and one of the pro tips I would leave, if you want to hire your person or an assistant, hire them before you actually hire them. What that means is pay for them, save, put aside the cash before you actually hire them. You'll feel so much better bringing them on board.
Yeah. That's actually a really good point. Yeah, I appreciate that.
Yeah.
All right. Well, listen, if you are a real estate agent out there, I'm going to recommend that you watch this episode at least 3 times. There's a lot of good information in it. I think Zo is a wealth of knowledge, specifically when it comes to, how to structure these things, how to grow the right way, how to make sure that you have the funds that you need. And it just, it all makes sense. And I think that the way that you convey it is in a very down to earth, easy to understand way. And so I really appreciate you coming on today.
Thanks for having me.
Yeah, thanks a lot. I appreciate it, man. Yeah. See you soon. All right, guys, take care. See you on the next episode. Bye.